concerns we brought up last week, at the show, came up again, which was people's concerns around is a pre-election year. Um, Everybody expects that, if we're disciplined enough, we'll continue to see the traction that we're seeing from the reforms. But what are your thoughts?
Right. Thank you very much, Raphael. Good evening, Chico. Good evening, Lagos. Um, so concerning my thoughts, I think people are kind of optimistic starting 2026, particularly in the market. And because it's pre-election year, it's also expected that, some of the reforms that the current administration had promised would continue to see the implementation of those reforms. However, I think there are divergent views. Some people are comparing 2026 to, prior years before COVID, and, they're looking at inflation numbers, the price they used to buy their goods and services before compared to what they're spending now. So there are kind of divergent views rather. And because of that, I think we are not seeing that, lots of optimism towards the election and the current administration. But I mean, the market is optimistic. Why? Because we are seeing the impact. We are seeing the impact on FX. We are seeing it in the equities market, in the economy as a whole. We are seeing it on crude oil prices and inflation rate as well. And, those are positive drivers. However, I think the implementation of the budget is a big factor. People want to see better implementation. People want to see the expenditure fully utilized, and they want to see the impact in the economy, basically. So I think people would look out more for these things going into the election year.
Okay, thank you, Fisayo. So if you look at people, it's the beginning of the year. People are probably trying to set their goals, but they need information about the economy to be able to do this. So we've looked at the macros, we've looked at those indicators. Um, your first advice around currency, naira, dollars. What should I be doing? Should I hold my assets in naira? Should I hold my assets in dollars?
So a lot of people ask this question, and the answer I usually give is: Do you have obligations in dollars? Do you have obligations in naira? If you have obligations in dollars and you hold only naira assets, then there is a currency exposure. There's a currency risk, potential currency risk. Let's say the exchange rate is stable right now, but I mean, what if anything happens? What if there's a shock? COVID-19 did not announce before it came. So what I always advise is, if you have obligations in other currencies, then it's advisable to hold assets in those currencies, or hold assets in a currency that you know is strong most of the time, so that even if you convert, you are not really exposed, you are not overly exposed to exchange rate risk. So on a balance of factors, just look at your obligations in the future. What are your objectives? Then balance your portfolio accordingly, based on whether it is weighed on naira or dollar assets or some other currencies. So that's what I would typically advise clients.
Okay, so balance it. Hold some naira, hold some dollars, especially if you have a dollar obligation. It's very important that you do that. But what do you then put this funds into? I think that's another critical question on the minds of Nigerians. So, how do you see the opportunities out there? What's going on in the market as we begin to look at this positive outlook? What's going on in the market? I think it's important that we're able to also look at this, so that people are then able to understand where those opportunities are. If I'm to hold assets in naira, if I'm to hold assets in dollars, then how do I really play?
So there's something we call top-bottom approach, and we like to use it a lot. That's you look at the macro economy, and then you pick out the variables that are meant to perform well. So this year there is projection that GDP will be around 4%. Some are even projecting as 4.56%. If that is the case, then what are the sectors that will drive these GDP numbers? So when you drill down to the sectors, perhaps it's agricultural sector, financial services, telecommunication sector, then look for the companies in these sectors. Are these companies listed on the exchange, for instance? If they are listed, what are their plans? So now you've drilled down from the economy to the companies itself that
That's
would,
right.
turn out these numbers. So are these companies trying to expand, their services? Are they trying to go into negotiations, to maybe reduce their costs? Are they trying to maybe increase prices? all of this would lead to earnings growth. And when there's earnings growth and there's discipline in terms of cost management, then you see better profit after tax. And that actually is a positive thing. So you can position ahead by investing in some of these companies such that when that growth now materializes, then you benefit from it. So that's how to look at it.
You know, can I come in here as a lay person? Because I consider myself sitting in the studio to people are pretty much technocrats because your area of expertise. I've never really been that savvy when it comes to the math or the macroeconomics figures and the buzzwords that get used and all that kind of thing. But I know that the bottom line for the common person is about the cost of living and what it costs them to operate on a daily basis. Now, I saw something on social media over the weekend. Someone put these two receipts side by side. He bought exactly the same things 5 years ago, and then he went to the market to buy exactly the same thing recently. And 5 years ago, the things he bought came to 27,000 or something, and then he bought the exact same thing. He put the two receipts there, he's got the dates on them, 146,000. Essentially, what that means is that anyone, say a salaried person, who hasn't had an increase in salary in the last 5 years is essentially poorer today. Anyone who perhaps sets money aside, oh, I'm saving and put something based on that salary, then is poorer today. So when I hear these figures, and the economic outlook and there's all this optimism, I just wonder whether the common man like myself, whether they really are going to buy into that. Are they at what stage does one start to feel like there's actual change, or does it never trickle down? I want us to come at it from that perspective.
So what you're saying is that the numbers that we see does not actually reflect in the pockets of a
I don't
layman.
know that they do.
No.
I don't know that it does. A loaf of bread that 5 years ago was less than 1,000 naira. It's some now are chasing 3K for a loaf of bread in some areas, and people have cut out things like sardine, for instance, to make a sandwich. So I just say, in terms of the quality of life, or are we talking transportation? It goes up. Does it ever come down? No. So I really don't know. The only thing I know really that its price actually does fluctuate, because I bought a 12.5 cylinder gas yesterday for 15,500, and the one I buy it every month, and the one I bought before that was 18K. So okay, other than that, really, I struggle to point at anything.
All right. So my opinion about that is when you are considering investment, you have to look at investments that can outperform inflation. I know that even the inflation number of 15.15% that came out, people were also complaining about it, that inflation is 15.15, especially on that post you referenced. That is it really 15.15? People are not feeling like it's 15.15. But then if you look at when the first receipt, which was in 2020, compared to that of this year, it's been close to 6 years, right?
Yes.
So there had been inflation numbers for every year. The inflation number you see only accounts for a year, the 15.15. That was just December 2024 to December 2025. So we have to look as far back as 2020. What had been the inflation trend? And trust me, it had been, it went up. It went really high, touched above 30% before it started to trend downwards, and before the NBS rebased the inflation. So these are actually, the reality of the populace, because prices of goods and services increased. Now, how can you position so that you are not at the receiving end of, all these negative impacts of, the economy and the correction and everything they had to put in place just to be sure that exchange rate could stabilize by investing. But if you want to invest, you have to look for assets that would appreciate. People that bought real estate in 2020, if they check the price, especially if they bought it in naira, if they check the price of that real estate asset today, you would see significant appreciation. So these are the kind of investments you can make to balance, the impacts of, all these economic changes
Everybody
in your day
wants to
to day.
scale.
Yeah.
Everybody wants to scale. Everybody wants. When you describe it like this, it sounds like these things are for a select few, for somebody who perhaps got some inheritance or won the lottery or whatever, and suddenly found themselves with a bit of money and was now thinking to themselves, okay, what do I do? Certainly, a salaried person or someone who's in his everyday cash business is not ever going to be in a position where he's saying to himself, okay, yeah, you just won't. You're not going to get a loan. The interest rates offered by banks, if they are going to give you one, are ridiculous. It really cutthroat. So I just want us to try to speak to a path for the real common man. Not the person who's a little bit comfortable and gets a little bit of liquidity, that is sitting to themselves considering, okay, yeah, like real estate is good. I'm talking about the real common man, who are really the masses. What does such a person do in what appears to me to be a really hostile environment when it comes to anyone who is trying to, with their daily bread, just make some kind of headway?
Okay, so what I would say is no matter what your income level is, you have to invest. You definitely have to invest. Now, there are investments that are capital intensive, and there are also some that, due to innovation and, creation of investment that you can, go into with small amounts of money, that has made it possible for basically everybody to be able to invest. So we have different investments in the market today. If you look at the mutual funds, for instance, you will see that we have money market funds, which is really gaining lots of traction because we saw the largest growth in that fund compared to other funds. That fund has really grown significantly. There are also equity funds, all these stocks that I was mentioning before, MTN stocks, the bank stocks and everything. You can actually buy them if you buy a mutual fund that invests in those stocks. Now, you don't necessarily have to buy 5 million worth of MTN or 1 million worth of GTCO. There are some of them with just 10,000 naira. You can have a unit in those mutual funds, and that unit represents all those stocks that we have mentioned. Now, if you check the performances of the equity mutual funds, so let me say stock mutual funds in the market last year, some of them returned very, very fantastic performances. Some of them were above 50% just last year.
Correct.
And 2 years ago, some of them also returned, something around 40%. So at the end of the day, if you accumulate all these returns, then you are better off. I have a client that came to us and, said, you know what, I have an investment with you in one of your mutual funds that combines stocks and bonds.
Yeah.
That I did it about maybe 20 years ago. And then I used to put like maybe 100,000 naira every month. And that, can you help me check that investment? So we checked the investment, and by the time we checked, the clients had accumulated like 23 million naira. And the total contribution was roughly maybe around half of that value. The client even stopped contributing at some point and just came back years later to say, I have investment with you. But it had grown because you had put it where it is going to grow. So if you don't put your money where it will grow that much, it won't. So irrespective of your income level, you need to understand investments, and you need to also pay attention to the ones that can outperform inflation. And they've broken them down such that you can invest with little amount. So even if it's 1,000 naira you can afford every month, just put it there, and then leave it. Have the patience to invest in equities.
Be disciplined.
And leave it there, let it do its work. Then you'll see the impact of this investment years to come.
So with 1,000 naira, you can actually start a money market fund account, and you can begin to grow that gradually,
Absolutely.
I think at some point we would elaborate more on mutual funds, so that according to Chico, the people at the lower end can have more information on what they can do with a small income, or what they think is a small income. There's really no small income anymore. So, um, thank you very much, Fisayo, for that view around what everybody can do. Really. Um, and I think there's something that is also important. For most. So we talked about real estate. We talked about stocks. For most part of last year, um, I saw the trend around gold investment, and last week as well. I saw a conflicting news around the social media. One said federal government was trying to site a gold refinery in Lagos. Another news came up saying no, it wasn't federal government; it's a private institution, but it's been encouraged by federal government. But what is important is that there's an opportunity to invest in gold even in Nigeria, and gold really made a trend, last year. I don't know if you want to share some insights around that asset class and maybe other alternative assets as well.
Okay, first thing I'll say is that Nigerians like to hold, physical gold. So I think rather than going to the market, people like to just buy gold jewelries and keep in their houses or in the vault or something. So Nigerians have gold investments, right? However, I think what the federal government was trying to do is to not let Nigerians to export our raw materials without adding value to them. Because guess what happens? We'll go to Dubai, go to buy, this finished products, and we'll pay for whatever it is they had paid us for buying the raw gold, and we'll pay for transportation. We'd also pay for the value they've added to it. So what they are trying to encourage is for us to add value here and get as much benefit before the products go out. But then let me leave that aside. As regards gold, so gold investments gained traction because of geopolitical tension, and we all know what is happening in the global economy. So whenever that happens, people want to hold assets that are not tied to a currency that's, at the end of the day, you want to kind of punish the currency. So you want to dump the assets in that currency. And if you're holding the assets, your value may decline. So people want to hold like a neutral asset. And that's why gold gained lots of traction. Even this year, gold is already up around 6% or more. So, and it's because there is still geopolitical tension. So as long as there is geopolitical tension, there will be demand for gold. And that's why we are seeing that traction. And thankfully, Nigeria has gold reserves. The only thing is we are trying to make it available and something people can invest in. Because today, we only have one stock on the exchange that is backed by gold. And that's new gold. Even the gold is not in Nigeria, So, but we have gold in Nigeria. So can we do something by putting the gold we have in a place where people can invest in it and, grow that sector of the economy?
That's what I'm thinking when I saw the
Yeah,
news.
so I mean,
That
let's
was what
see
I
what
thought.
comes out of it.
Interesting. So, thanks for that, and thanks for your view on that as well. So let's just quickly touch on the new tax act. Do you see that impacting the positive view that we've seen on the economy? And do you see that benefiting the layman, like Chico had mentioned earlier as well?
Okay, so the federal government is trying to expand its revenue sources, and we'll see that in the past 2 years they had borrowed a lot, and the implication of borrowing is that you continue to accumulate debt and you have to service the debt. So whatever revenue the federal government makes, they have to pay a huge part of it in, interest and I don't know, coupons and all that. However, is there a way the federal government can generate revenue from Nigeria itself? So they are trying to consider tax. Tax is always, a very sensitive subject because it means that people have to let go of whatever returns or whatever earnings they've made. Now, if you look at developed markets, I don't think any of those economies really grew so much without taxes. The ones that did, maybe they were very disciplined with their natural resources or
But
the
they're
competitive
developed.
advantages they have. So yes, they are
They're
developed. So
developed.
so they did something about it, right? They are paying taxes now. If you go there, you will pay taxes, right? So I think it's a good thing if the federal government is able to show. When you say show workings, show the impact of collecting the tax. Are we going to see improved roads? Are we going to see better power supply? if power supply is going to be steady, of course I'll pay taxes, right? Because I just need those services to be there. So it is if the federal government is able to show, discipline, is able to show workings in terms of implementation of all these infrastructure projects that they had promised, making hospitals available in rural areas. Everybody is connected. There are no power outages and things like that. Then people will trust the process and be willing to pay taxes. So people are doing it now because it's a matter of compliance. But I think a time will come when people will start asking questions if they don't see results. So I think it is very important to actually see results of the impact of collecting higher taxes, so that it's something that is acceptable socially
to the society.
Yes.
Okay. Very quickly, Fisaya, do you want to help us touch on the sectors that you think would benefit from this positive outlook this year, and sectors that you probably think might struggle?
So I think the agricultural sector should benefit. Why? Because people must eat, irrespective of whether there's increased taxes or not. So the agricultural sector, just that there are expectations from the sector as well in terms of reducing post-harvest losses, making sure that insecurity is reduced in the food producing parts of the country, and also export, so that at least the country can earn earnings in foreign currency, and there wouldn't be too much reliance on borrowings from external sources. Yeah, so that's that. In for the manufacturing sector, I think they will still struggle because of the power issue, and also access to finance is also a thing. If you check MPR is at 27% now, and it has only gone down by 0.5% really, or 0.5 percentage points. So at the end of the day, if you want to borrow from the banks, the rate is still around MPR, and we are talking 30% or thereabouts, which is still high. So if borrowing rate is acceptable, if it's at a rate that encourages expansion, then we should see manufacturing sector actually perform well. Sectors that are largely import dependent may also struggle. Why? Because of the impact of tariff. However, internal sectors like the telecommunication sector in Nigeria, for instance, I think they are bound to do well this year because, based on what they did last year, where they renegotiated some of their contracts and also increased tariff, that should actually support growth. So investors can consider the telecom sector, the agricultural sector, insurance sector as well, because of the capitalization and the fact that we may actually start to see some mergers and acquisition in that sector, or the race to raise capital. So these are some of the sectors that we think we do well. Industrial sector as well to some extent, and the real sector of the economy, that's real estate and all that. So people can also look into that.
So you mentioned finance as a factor, as a struggling, as an impending factor for the manufacturing sector. Do you think that a private debt fund would help?
It could help if the rate is cheaper than banks, and you will not have to go through very stringent rules in order to meet that. The Bank of Industry at times would come up with loans at affordable rates for some of these companies, but you have to qualify for it. And I think it had really helped some of them that were able to access such funding. So if the private debt funds would be able to offer finances or funding at affordable rates, yes, I think it will help the people in the manufacturing sector.
Private debt fund, yeah.
So private debt fund are mutual funds that extend credits. It's like they borrow you the money. So the fund manager will get money from investors, put it together, and then look for businesses that fit their criteria. So they have some things they usually check. So once you check, all those checklists, once you're able to meet the eligibility criteria, then they extend the funds to you, you do your business, and you pay back the principal plus interest. So the funds are SEC-regulated, so you have to submit to the regulator, and so
we'll look at that at some point on the show as well. Lagos would like to let you know that next week we will be speaking to the head of MRIF at ARM. MRIF, I'm sure you'd have seen a couple of signboards. That's the new thing around the housing development in Nigeria today. It's the in thing. Offers mortgage at 9.75%. I think it's an interesting discussion we're going to have next week, Monday, at the same time, 5:30. Chico and I will definitely be here to speak to you again. Chico.
That's right. Thank you so very much, Messiah, for sharing. This has been wealth management and a regular expert on the show. Hope you found it as enlightening as I did. Stay close. This is Classic FM 97.3, where wealth management and you comes your way at 5:30 every Monday. You heard what we're talking about next Monday. See you then.